Hey, you like the stock market? What a coincidence. So do I. In fact, this is my reoccurring Monday real life stock review where I look at stocks that you requested and go through the analysis and see what's shaping up. Let's dive in together right now.
Hey traders from around the world, what's going on? It's your boy Jeremy Alexander Newsome with reallifetrading.com. I hope you had a magnificent, marvelous, and majestic weekend. It is indeed Monday, and we had a pretty interesting day out there in the markets. We traded down to the 100 simple moving average on a weekly chart, and that is what I kind of talked about on Friday would be a really, really beautiful spot to pause. This looks like a candle that would be posted, you know, in 7, 6, 8, 9 trading days. Nope, this is just one day's candle. Check this out on the daily chart. Really interesting, very pretty, nice, long, lower shadow. I would love to say that I went long at the exact bottom on SPY, but I did not, at least not for a day trade. What's really cool about this candle is, again, this is going to be a wonderful, wonderful spot where we get to say, okay, at this particular point in time, we should not break below this low. What's really wonderful to note is this candle on the SPY, the ginormous bullish candle, we never actually closed below the low of that candle. Yes, we made some lower lows today, and we had a really good breakdown this morning, and that was fun. But for all intents and purposes, we have not closed below what the low of this candle was, which was 266.44. And until that happens, I think we're going to be okay. So this is the what I would say at this particular point. If we're going to get a bottom in this market, today's going to be it. The close that we need to be really watching will be a close below 266.44, and of course, obviously, a close below the low of today would be pretty much disastrous. This is coming in from these lows right here, and what's really cool is the last low that we had right there, we actually did make a little bit of a lower low. So this is where all of the newbies probably shorted, right? That's probably where they all got in bearish. But again, that is the 100 simple on a weekly chart on the SPY. So are we going to bounce here is going to be the big question. The answer is we should realistically bounce from here. This is going to be the spot. Again, nice low, still a higher low. We are still making higher lows relative to these candles. So, I mean, as far as the bounce, we will find out. I'm totally cool with whatever happening down these particular prices, but a very, very key level came in on the SPY today. Here's the Qs, and the Qs, which is the ETF that tracks the NASDAQ, was also down pretty nicely at one point during the day. Here's the daily chart, and you can see Mr. Squiggles actually thinks that we probably do end up breaking a little bit lower, which again is certainly possible. I'm not saying it will happen, but it just seems likely that we do. In fact, if I hide the drawings, here's the pretty strong bullish candle, decent retest, and we're just kind of retesting this nice little gnarly bearish candle on the Qs. So the weekly candle, right, got some support in here. So again, if we do have a rotation lower, it does make sense for us to trade up a little bit higher before we actually have a full-on rotation down again, if we get one. The, again, slightly bearish sentiment out there on this market is right now the 10 is about to cross the 50 bearish. Now again, keep in mind that has happened before over here, and what actually occurred is you can see right about the time that it did that, we did end up kind of rotating lower, eventually making some lower lows, but we did bounce higher and start running. So it doesn't necessarily mean we're just going to zero just because that cross happened, but it does mean that a lot of indicators are going to be pointing towards selling at a higher spot and buying a little bit lower. So that's the Qs, really interesting candle coming in there. The Dow Jones ETF, here's the DIA, and the Dow, just a hammer of Thor popping in here. Still did not close below the low of Thursday's candle. So really, really important. As long as we hold that price, again, on the Dow, we are making higher highs and higher lows still. It's not pretty, it's not amazing, and that's okay. But by the way, we don't have to make higher highs and higher lows We just have to make higher highs and higher lows in order for the bullish trend to continue. If we trade back down and we start taking out the lows of this week, I mean, we could be in a big distribution phase where we chop around for a lot longer, which I personally think is the most likely scenario. Or if we do just really just rip and break through some supports, that's when we can certainly be a little bit more bearish overall. But until we do that, I'm excited by the low and the shadow that we got that put into the market today. Now again, that can be all just reversed tomorrow, you know. So if we have a gap up tomorrow, very similar to how we had on Friday with that really strong bullish candle and then a gap up and then a fade down. If we get that tomorrow, and again, we start making lower lows, lower highs, that's totally fine. But what's really fantastic is we're coming up right into this zone, time frame, and price of which we will know very shortly, I think within days or weeks, what the market does from here. Let's go look at some stocks that we traded today. This was GameStop, ticker symbol GME. And GameStop, my buddy who's visiting from Virginia, Troy Weinhauer, he's down here until Thursday morning trading with me. He gave me GameStop this morning, told me it was a bearish gap and go on dividends. So it was a white candle gapping down. And here's the 3-minute chart on GameStop. And this was really just the play. Still have it on the chart. Entry below the low of this bullish high wave candle. Stop was 13.32. So pretty much right at 20 cents of risk. That was 19 cents of risk. And once it broke down, the target was 12.85, which, I mean, 2 pennies away from the exact low of the day. Pretty happy about that. In fact, you can see the tweezer bottom on the 3-minute chart, and there was a really nice hammer on a 5-minute. Where did I get 12.85 from? Well, if you kind of just scoot over here to the left, 12.85, you can see really strong support on a 5-minute chart. Just, I mean, we had bounced there strongly before, you know, back in November 30th, so I figured, why not just snag out and take that beautiful 1.42 Rs. Another one that I played was CarMax, took some with KMX, and CarMax wasn't anything special. Let me just hide all my drawings here for a moment. But CarMax, this was the daily chart, and again, like most candles, I was watching for the break below the low of Thursday. And what I like about CarMax is the weekly 200 was at 62.82. So when I was setting up my trade, I was actually able to put my stop in above that price. And I just like that. I like the setup. Here is the 5-minute chart. And so the very, very first 5-minute candle, you'll see was this really nice, check this out. This was it right here. Really nice bullish candle with nice lower shadows. So the first 3 candles were pretty good bullish candles. And then we closed below them within 20 minutes of market open. So we closed below it. That was the entry, and then the stop was just kind of conservatively placed above there. So here was the entry. Old stop at 63.03, entry at 62.29. This little red arrow, that's where a little burgundy arrow, that's where I got out about 61.72. That was when the market was tanking. The market was down around 1.5%, and that's when the SPY was interacting with the 100 simple on the weekly chart. So I was actually just talking to Troy a moment ago about when you're day trading the SPY, especially if you're in bearish or bullish. I mean, again, the move this morning, this was a really big move from here. Sorry, let me do this again. From here to here, right? That's 2.25% down on the SPY. That's a really gnarly size move. And when you're being down that far on the SPY, I'm not saying that it can't recover or it can't go higher than that or lower than that, but oftentimes when you're trading the general market index, it's not going to move much more than 2% in any given direction, up or down. So when the SPY is at 2% and it's running into the 100 simple on a weekly chart and you're profitable on some bearish trades, exit, take your gains, and move on. The only thing I'm a little sad about is I didn't get in bullish on the SPY down here, this little double bottom. I missed that, but it's okay. Because had this wonderful trade that I also posted on the Trading View. For those who trade futures, check out this 4-point bracket on the ES. This was last night, Sunday nights. Those are my nights for futures trading. I really like it a lot. And this was a 4-point setup because it was one of the tightest stops I've done on futures yet. Usually it's around 5 to 6 to 10 points, but this was a 4-point stop. Unfortunately, I only did it with half a risk unit, which is $250, and that was, man, should have done the whole 500, but this was a gargantuan move on the E-minis. Check that out. And this was pretty much, I mean, market open right around here is where I exited for what would have been, on a full risk unit, 4.29 Rs. So it was a little bit over 2. But ladies and gentlemen, as of right now, the good news, as you all know, I think you're all kind of tracking with me, I was down on Friday. Friday was a profitable day, but the first week in December was really pretty rough. Pretty tough. Down, on Thursday, I think I was down 3.75 Rs overall, and Friday got 0.5 Rs. So today was almost a 5 R day. Wonderful, wonderful. Getting back into the green. I'll get the final tallies a little bit later. I do still have some swing trades that are down. Those are unrealized, but they're really close to getting realized. Here's Billy, B-I-L-I. This is one that we're in that this is just not cooperating right now. Really kind of a cute inside candle. I have moved the stop on that, but most likely going to get stopped out of that one pretty soon. Blue Apron, just pennies away from getting stopped on a Blue Apron for about 0.47 Rs of a loss. NIO, so ticker symbol NIO, same thing, came pennies away from getting stopped out today. The low was 674 and our stop was 669. So if I get stopped on that, I'll lose like about 0.3 Rs. Dropbox is a bearish swing trade that was up a little bit today, but we're still up on it right now, just tiny. DBX, very small inside white candle today, which there's a lot of stocks that fit that criteria. I think Square fit that criteria, Nvidia, there's a few others. But I'm real excited to find out, my friends, what happens tomorrow in the markets, because if we get any semblance of bearishness or bearish breakdown, especially if we close below the low of today, I don't see any reason that we won't just continue going down, especially for those stocks that have that bullish inside day candle posting and hanging out today. That's kind of the thoughts on Dropbox. We also got triggered into Weight Watchers bearish, ticker symbol WTW. That one had a pretty big rally today, though, at some point. Got the stop above the 20, got above the 10, and also have it above that previous week's high candle. It's also, the stop is above the 100 simple moving average on the weekly. So that one might get close. I just felt like Weight Watchers, although yes, certainly down pretty far, I was seeing if it was going to pull back. Again, you had a decent bearish candle on Friday. Today was an inside day candle on Weight Watchers. So tomorrow, we will see strong bullish pop, strong bearish move. I think we're going to get one of the two. Don't really know which one for sure, but I think we're prepared nicely for either. I really like the upper shadow and the lower shadow on SPY. Very pretty high wave candle. I like it. Excited to see what happens from here. Also want to give a shout out to my buddy Seymour, who did really well on Ulta today. Ulta Salon and Cosmetics had a tremendously delicious bearish gap and go on Friday. This one was one that I talked about on Friday that I missed, and it had really good follow through today. Check out this 5-minute chart. Oh man. So this was the first 5 minutes today, market open, just this bullish candle that came in right as market open, entry below there, stop below there, train wreck. So good job, Seymour, locking in some gains on Ulta. That was very well done, my friend. Also, 2 other super small announcements. I want to give a shout out to my nephew, Daniel Newsom. Today is his 31st birthday. Been with Daniel, and we've been very close friends our entire lives. So Daniel, happy birthday. And last but not least, if you all want to get a chance to check out my new YouTube channel. So this is a personal YouTube where I'll be posting great information, but it won't necessarily be stock market related. If you want to get a chance to hop over to YouTube and just type in Jeremy Newsome, I'll also include a little bit of a video, but this is a new YouTube channel that I've started very recently. So I do a lot of book reviews, also just doing regular, positive, exciting quotes of the week, and just some general positive information. So if you want to check that out, feel free to hop over to that. I'll put that in the subscription. You can click the description box, click the link, check it out, subscribe. Let's continue enriching lives together. My friends, I will see you all on Wednesday for the next stock review. And until then, love life, live life, and trade it. I'll see you later. Bye.
All right, friends, that's it. Your Monday real life stock review wrapped up, finished, cooked, baked up at 450 degrees for your mentally delicious brain food. If you like that, make sure to click that beautiful subscribe button. And if you like this video, there's plenty more where it came from. Click that button right there to watch more. You rock.